right, here we go. Hello, everyone. Welcome back to the RationalInvestor.com's weekly rant-a-thon. Dun, 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 dun. Let's see if YouTube's working. Investor.com. Hey, it is awesome. Cool. All right, well, I hope you guys are all enjoying the insanity. I always like to see if there's anybody over on that YouTube page. Do you see we have quite a few people? Geez, good 30 people here in the Hangout today. So lots of site participation. Google, or I guess it's YouTube, been giving us a little bit of headaches past few days. So my apologies if the YouTube feed if YouTube dies here. It's just the way it goes. But we'll try our best. Right, I mean, the good part about it is how much did you pay for this, right? So enjoy the edutainment. Brian will talk silly for an hour or two. Hopefully you'll get some value out of this. I have to say, I'm a little disappointed, to be perfectly honest with you. And maybe there are other sound sort of talking heads out there, but I don't hear many. Fuck. I mean, seriously, let's do a site poll. Through the week, can you go out and find and post in the lounge some actual people that talk rationally and that talk sensically these days in the markets? Even the CNBC guys are kind of like, well, I don't know. I mean, nobody seems to know up from down right now. It's kind of silly. I hope you level oneers really heeded our message about just, while you're in the education program and just getting going, put your goddamn money away. Because this market, ironically enough, they always say what goes up must come down. Newton's law of physics. So don't be shocked if once sort of a vaccine has been determined and we're on the road to recovery, that the central planners all go, okay, well, we all gave you a free ride for a few years. Now it's payback time, pay-up time. I think the Fed wants to get the market juiced. And, I think their big number is they want to see how those employment numbers come down. Because, hey, man, those are their slaves. They want them slaves back to work. So I think that's a absolutely insane priority for them right now. It'd be interesting. We did finally have the catalyst of this $1.9 trillion stimulus package passed in the U.S. It's finally happened. And if anything now, I think the bankers, they have the ammunition that they want. Well, I mean, maybe we should just temper that. It's passed the House. Now, the Senate has to give it their blessing. And it's probably going to come right down to the wire where the vice president has to cast the deciding vote, that kind of stuff. So I think we're almost there. Maybe this week itself is sort of the pivot. So really, in my eyes, it's just a question of if the market does decide to weaken here a bit, when does the Fed bazooka go off? So I'd be a little careful about being a little too aggressively short through this. Interestingly enough, people on the site, it's been pretty quiet, of course, through the weekend as the cryptocurrencies are coming off here. But they find it interesting that a lot of sort of TRIers are kind of like, well, pull back into support, into key levels, which we can talk about. Not a shock here whatsoever. But, I do find that a lot of people are a little bit shell-shocked right now in this space. So, I always say that Bitcoin can't finish a move without some sort of horrendous top. That got pretty horrendous-y, especially with the way people are acting within the Ethereum space. But, I don't know. It's not really our business to call tops or bottoms. I mean, frankly speaking, I don't care. It's just another asset in the marketplace. Our job, of course, is just to make money from trading. Try and find those setups where, if you're proved wrong, you lose less money than if you're proved right. That's probably a better way of saying that. We always say, if you're right, you get paid substantially more than if you're wrong. But really, at the end of the day, especially when we get into this kind of environment where I feel as though the professionals are just messing around with the kids while we're waiting for the damn Fed bazookas to get in place and all that for them to support the market again. This is dangerous. This is really, really, really dangerous. So I would definitely take a risk-first approach when thinking about strapping on anything here. Risk-first approach. So when I say risk-first approach, is there a letter of the alphabet I'm trying to get you to be thinking about? There are some guys here like, I want more blood, give me more blood. How do we approach the market? And, there's 20, 30 people over there on YouTube, so maybe one or two of you know. What's the point of technical analysis? Why do we even bother doing this? Let's try to help us find those relatively low risk windows where we can take our shot. And at least we've got some levels that we can say, look, if the market goes below this level, I'm buying. In this scenario, I am buying. But if I've bought and it goes below a certain level, well, I've got a pretty good idea that whatever my bullish thesis was is probably proved incorrect by the market. I mean, that's the whole reason why you do technical analysis. It can, somebody over there on YouTube says, edge. Yeah, it can give you, especially if you can identify those risk windows and then try to identify sort of the behavioral patterns that are often indicative of, hey, maybe this market isn't as weak as what the price in the marketplace is telling you. Or maybe the price of this asset, maybe this asset's it's not nearly as strong as you think it is. Even though, the price is moving to new highs. There are ways that we can use technical analysis to help us in that regard. So I do like the fact that edge is a good statement. But at the end of the day, the only reason why we look at TA and try and use TA is to simply identify those risk windows that, hey, this isn't a bad place to take a shot. And you can kind of identify if you're right or wrong fairly easily. Actually, I see that a lot. I saw that over the past year with cryptocurrency, where fundamentally we knew that this story was very bullish. It was almost funny as the story progressed to listen to the insiders of the company. They're just over the top bullish and probably too bullish because their statements got them into a lot of trouble. And I think on balance, bullishness is justified fundamentally. And then to watch as technical analysis actually identified where to enter, then more importantly, especially thank God, thank JoJo, thank TRI Universe community with this Feigenbaum concept, but beautifully crisp levels of where to think about exiting, and then looking to reload, then looking to exit, and then using sound money management principles. It was beautiful to watch. Yes, nice fundamental story. But at the same time, too, you could have zipped in and out using technical analysis to exaggerate those gains and to clearly identify risk levels. I was damn impressed. So I'm sold on TA. 30 years in, I'm convinced TA is worth doing. I tell you, man, I'm about the weirdest guy you're ever going to hear on the interneting. And I gotta tell you, I mean, not to toot my own horn, but I gotta tell you, 99% of the shit I hear on the internet is garbage. It's just a shill, and it really sucks. I mean, frankly, it's just, you got these young guys who fancy themselves fucking market timers, just getting railroaded. And, people making fundamental pitches based on things like money flows, which really doesn't have anything to do with fundamentals. That's all just quantitative analysis. Oh, man, I swear. These young kids. I'll tell you, the CME boys, they told me explicitly, Brian, you are wasting your time. And I gotta tell you, the more I do this, the more I actually feel like I am. But to a certain degree, this little niche, this little community that we have here, this little pocket, your guys' job, when I'm done all this, and I've just exhausted, because in essence, I've given this place my heart and soul for the past 7 years, every single day on this crazy mission of JoJo's. But when I'm done, it's your responsibility to keep this flame alight and burning strong. Actually, I wrote a letter to all of you that I think I'm going to put, we're reorganizing the site right now, especially the library. And I want to make it a little bit sort of more user-friendly, so we're going to do some video tutorials. We're just about 90% of the way there. I was going to maybe even try and do one this weekend, but in the introduction section here, I've given these articles out. They work. They are the truth. I give them to everybody. In fact, I'll even put them on the YouTube page. And whoever does the write-up on this here, it's a nice little treat for you. There's one, and there's two. I mean, these articles, they are everything that I've taught since day one of this program. And they're just as true as when we started this crazy experiment 7 years ago today as they were then. I mean, so I don't know, which one did I give you? I don't know which one I gave you over there on YouTube. Hey, we'll call it, I don't know. What do you call that? Potluck. We have no idea which article I gave you, but if you're over on YouTube, you got one of them. But these are basically the, I start all people in the education program with, you have to know these documents. They're like religion to you. But what I was trying to get to with all this is I've actually, over here. I've actually put together a nice little document. Frankly speaking, I like this as sort of a manifesto of TRI, and I think it's a good sort of welcome message to what TRI does do and really what TRI doesn't do. So I'm going to be putting this at the top of the library. In essence, our core value, I guess, here at TRI is we want education and literacy. And ironically enough, if you approach this from education and literacy perspective, none of this stuff that we teach here is brand new. I mean, man, it's been around forever. So it's not like we're reinventing the wheel. This thing called the process. I mean, it is the core of sort of, I want to run a small business of trading. That is what we do. It's everything that differentiates between the amateur and the professional. It's cut and dry. And the sad part about it is 7 years into this, I've still watched people 7 years in struggling because they just won't let go and commit to the process. 7 years I've watched them struggle, which is really sad. As I said, it starts with education. You have to enlighten yourself. You have to understand that everything in our universe seems to move in circles. Nothing moves in a straight line, which means that everything is subject to If you don't learn from history, you're doomed to repeat it. So, education is absolutely the cornerstone of what we do. And it's not like buy my methodology, buy my approach. That's not the process. The process is really more about how are you going to go about doing this, of learning the market, of learning how to control your own behavior, about understanding the context. Are you inside the box or are you outside the box, looking at the box impartially? Literally, you could spend a whole lifetime just exploring this thing called the process. And interestingly enough, one guy that I used to work with, he sold a course, and actually I talk about him in the education program at length. I have high respect for him, Ray Burchett out of New York City. I ran a program called Intuitive Development for Traders. And he never talked about charts. He never talked about setups or am I going to buy here or sell there. Nothing to do with that at all in his course. And he had the fucking course like 5-10 G's. And people pay big money for it. So that's all about the process. The next sort of arm of TRI, and this has been sort of our evolution over the past 3 years, is this idea of facilitation. I think we can leverage technology to make this process of learning the process and then implementing the process. I think we can make it easier. I think we make it a little more user-friendly. We can leverage technology to give us more clear sort of examples of setups that meet all of our various technical criteria. And we can also do fundamental screens that sort of make the finding of ideas a little easier. And really, ironically enough, what ends up happening is the platform just becomes sort of like your palette, if you will. That's probably not the right word. It's actually, with the way I would look at TRI is a utility, where all you are going to do is come and use TRI to as a tool to meet an end. What's the end? What do you want to get out of this? Oh, I want to buy a Lambo. Okay, well, we'll use TRI. We'll get you educated, and then we'll give you the tools to build that framework of what's going to get you to act. And then, of course, ultimately, you got to act. So, also, too, and this is kind of an added bonus, which I really didn't expect, but we can build out toolkits based on where we think you are in your education program process. So, for example, I've been working away on this, actually probably here, on the dashboards. I think what I'm going to do is I'll have sort of like everybody that's just starting the school program. You're not going to get the Hooten dashboard. You're just going to get just a nice simple dashboard, simple breadth indicator, which we learned very early in the course to help us understand sort of, intermarket analysis relationships and messages of markets. And maybe just a simple news feed, just so you know what the hell's going on in the world. Simple economics feed, obviously a big old dose of Brian every day. And then just, simple tools to track how you're feeling, very user-friendly. Like the 30-day trial people, I think will have a very customizable dashboard. Obviously, you don't need things like journals and stuff in your 30-day trial. And then, as we sort of mature and we get settled in, what would sort of a default dashboard look like on a daily basis, looking at the market for timing signals and, understanding breadth in a little bit more detail. And, of course, these more advanced sort of memberships, if you will. I'm not quite sure what the term I will use. But they would come with sort of more advanced market analysis tools and things like understanding the breadth of the crypto universe. All you guys are so in love with this damn ADA right now. Look how it's just rocking the market here. So I guess that makes sense. That's funny. And I noticed this too. Did you guys notice the bid for Tether on Phoenix is just ripping? That's hilarious. Tether is actually the strongest altcoin right now. That's so funny. Anyway. And then also too, more advanced kind of concepts, Dow theory, bond market relationships, stuff like that. Of course, the big thing that you guys are all clamoring for is the signals. So interesting, had interesting. Look at that, got a bearish momentum signal on silver there. Sure feels like the market wanted to come off there to begin at the end of last week. That is interesting. We're seeing a lot of these kind of signals. The ETH down proxies are spitting up buy signals. And of course, my key reversal screener, always wanting that. We'll build that out. Internal tools. But anyway, the point of the matter here is these are going to be various dashboards that we're building out. And then, of course, advanced members. We can go into like just a universe of screening tools and stuff like that, and actually being able to build your own screeners. So, like I said, this site, and like I love this kind of work. Maybe just before I leave this, I'll just give you a just a little teaser. What's the best way to show you this though? Maybe something like this. The advanced screeners, the tools that we can build, and Sjord's actually working on embedding these. This is .USDT, so I'm not quite sure what the hell's going to come up here, but let's see. So we can, all the tools and the signaling systems. I actually don't see it there, but all of these are customizable. So probably I want to show you one that's got a whole bunch of technical indicators. These might be good. Let's see what we got here. I mean, it's just remarkable, the tools that Sjord is building. Except no results. So anyway, I'm not going to go down that rabbit hole. I'm not quite sure why I decided to go down that rabbit hole here with you here today. But gotta say, the boys are building out some pretty damn cool tools. We're getting there, slowly but steadily. And actually, why don't we go over to the breadth? This is kind of a cool application of this. If we look at our screener and we just say, okay, what the hell is going on with things like ADA? The cool part is the tools that we're building give you a really graphic illustration of what's going on. Yeah, I can see all you volume kids are coming in hard here. So super stoked. Really good stuff. Good stuff. So that's what's sort of going on development wise, and I guess bringing this sort of back to where I started all of this. At the end of the day, the most important thing is you want to see people actually making money from trading and running their business appropriately in a best practices manner. That's the most important thing out of all of this. Because frankly speaking, if we didn't eat our own cooking, this would all be worthless, right? Wouldn't it? That's the one thing I absolutely hate about a lot of these social media guys is they don't actually demonstrate and actually, show you that they're actually taking the trades, or they do, and hats off to them, and they get absolutely destroyed. There are some good traders out there, don't get me wrong, and like I said, I'll put a poll out on the site. If you actually have somebody on YouTube that's showing you, look, this is where I bought, this is where I sold, made money from trading consistently, then fucking A, man. So, point of the matter here, and hopefully, if you want a demonstration, just go look on my Twitter feed. I ran a fun little account. And I gotta say, man, I made a ton of money off of this with really low risk. 1% portfolio risk per trade. Just banging out doubles in the stock market over the past year. I think I've taken about 60 G's from the market. On a really small account, too. Not even a really big account. So, what can you do? Having fun. And, of course, I got all my original money that I put into the account, plus a nice 20% return in cash right now. So if the whole fucking market falls apart, which I don't think is going to happen, but if it does, well, I got lots of ammunition to go in there and buy it all back. So I try to, and if you want to follow Brian's feed on Twitter, I do the banging out doubles thing. You know, that's just it's supposed to be, that was the whole reason why I did this. Not some sort of ego boost or something. It's just supposed to be, look at, this is a guy who actually does what he's trying to teach you guys to do. I mean, that's it. Simple as that. I don't work with big numbers. I see somebody over there on YouTube's like 60 grand, 60K. I don't work with big numbers like that. A portfolio, I had like $20,000 in stocks that I bought. So $20,000 turned it into, well, actually it'd be more than that, eh? I guess it'd be 80 if you included the original 20. I mean, to me, that's pretty good numbers. I like that. And more importantly, kind of like my tweet header, it's super important that you understand I always take a risk-first approach. So, I mean, I suppose you could have taken that 80 grand and just gone and, you know, it's not even doubling your money. And you're like, well, you know, so what, Brian? But I only risked, I guess the average is about, about $800 or so, somewhere in that area per trade. So just like this, like ironically enough, people look at that and go, oh, okay, well that's fine. It's not really that big of a deal. But the most important line here is $500 into 100 grand with no one position taking more than 5% risk. That's the key to me to all of this. How much do you put of those 20,000 in each idea? $2,000. Or what was it? I put the account. I started the account with 82K last year, and my maximum drawdown actually invested was about $20,000. So at no given point in time, and I had like I guess about 20 or 30 positions on. And then of course as soon as the damn things double, that's free money, so I get my original capital back. And then I go put that capital to work on a new idea. So now I got something like 100 stocks in there. Kevin probably knows. How many stocks have I got in that silly little account now? From starting with nothing like a year or so ago. And they're all free. It's like 50, I don't know. Kevin says it's around 100. So it's all free. You know. And of that 80 grand, the rule was don't put more than 1% of your money at risk in any one idea. So that was $800. Well, yeah. Anyway, the point, and really I couldn't give a shit about that. It doesn't matter. What I'm trying to say here, and really this is the whole purpose of this banging out doubles, was that I basically built a plan. I said I was going to do the plan, and I actually am doing what I said I was going to do. And that's the most important out of all that, is for you to believe that this is doable, you have to see demonstration. So that's, you know, this is really the core of what I do, and hopefully it comes across as that. And like I said, I'm trying to build tools here to make this a little easier for you as a site participant kind of idea, both through getting sort of wise as to what the process looks like and where you have to get to if you've never done this before, and then also the tools to help you do that as well. As us actually doing what we say we're going to do. You know, really what I would say here, and this is so important, is the site now, thank heavens, has gone beyond Brian Beamish. There are people that come into TRI on a daily basis that just simply demonstrate best practices, and they are doing very, very well in the market. And our site OGs, these are really nice people that have only others' best intentions, best interests in mind. Nobody shills anything here at TRI. You might be encouraged to go off to another site and watch there, their broadcast, and you might be shilled something over there, but at TRI, nobody's going to shill you anything. And if they do, then bring it to my attention, and they will be politely told not to. And if they do after that, then they will be asked to leave, as well as attitude, same thing. It's pretty obvious the people that are sort of PMA type people and that are here because they just have a desire to learn and get better at trading versus the people that are kind of snarky and have kind of a piss poor attitude. So love this community. I'm so in love with this community. It's everything that I kind of hoped for. So I'm really proud of you guys. And if anything, we've been talking a little bit about NFTs and ways for the TRI members themselves to both contribute, be remunerated for their contributions, and for site participation, sort of community driven. I'm really in favor of that thinking. I love that thinking going forward. And I think our management team likes that thinking too. I think Sjord's super jazzed about the whole DeFi NFT kind of idea. So this could take a really interesting positive turn for the community. Gotta say, most important and most valuable part of this place is the fact that I don't have to worry about going to bed at night or even taking a few days off. There are going to be people like Sharktoshi. There are going to be people like Kevin. There are going to be people like Sjord. There are going to be people like, the list just goes on and on and on and on. I see Ray here. Ray's going to turn into one hell of an options sharpshooter. Hey, caramba. And what's cool, too, is we even have people that sort of drift back to the site years later. So you never know which OGs will turn up next, but there's always people around here just demonstrating best practices. And then if you get somebody coming in that's a little bit off the rails, I love to see how they just sort of gently try to guide them back onto the process. So I'm looking forward to sharing this document with you guys, and anybody's doing like 30-day site trial kind of thing. I think this kind of message, this just very blatant, very poignant, very to the point message of what TRI does and what we don't do, and what we really want to see happen here at TRI. I really like that. I definitely will say that I've asked Sjord to actually help me with I've said here World Through Financial Education and Literacy, and I definitely think we need to add some sort of, a component about technology, both the use and understanding of it in that statement as well. So don't get me wrong, this isn't a finished statement, but I really like this kind of message for both the, people that want to do 30-day trial. Okay, what are these clowns all about? Well, that tells you exactly what we're all about. Anyway, okay, so what we usually like to do is, doesn't look like we have too many questions here. So what we usually like to do while the school term is open is just talk directly to any additional questions the Wookiee couldn't get to, or maybe thought that I might be able to give a more appropriate answer for the level 1ers here. I think this morning's session was another good 2-3 hours, eh? So I don't know. Were any of you guys in that level 1 class? I think a couple of you in here were. Yes. Oh, Costco executive member. That name, that kills me. All right. So that was a pretty thick session there this morning, eh? A good couple hours at least. So I hope you guys feel like you're getting good value. Of course, you know how obsessed I am over that. We'll do these. Then maybe we'll jump over to YouTube and talk to you guys a little bit and see if we can do a little schmoozing with that audience as well. So first question, Brian. Everyone and their dog has been talking about bond yields this week. The big rise and the fear it created in the equity market. The market seems more concerned about this than Jay Powell, although I suspect he is very concerned. Perhaps the market is trying to lead the Fed. Could you please talk about the macro thesis versus vis-a-vis what's going on here? I mean, I can talk about it and I can give you my opinion, but that doesn't necessarily mean I'm right. So I know a lot of people seem to think that, you know, a clown like me, you ask me and I'm going to have the answers. I'll give you my opinion, so we'll see how that goes. I'm hearing many different opinions about what's happening and would like a summary from a grizzled vet such as yourself. Thank you very much. Love the rants and happy to be part of TRI. Oh, that's our Costco guy. That's cool. I got a funny feeling you're going to be in my life a long time with a name like that. That's awesome. You were meant to be here, dude. All right. Well, what's my 2 cents? You know, they always say a picture says 1,000 words, so it's probably better to talk pictures. Ooh, hello. It might be a nice little interesting setup for those adventurous bottom hunters. But I suppose I'll leave that conversation for later when the YouTubers are like, hey, what am I supposed to do? What do I buy? What do I buy? I want to make money. All right, where should we go? Let's go over here. Space is looking a little happier. Then let's go. I don't think I have it open, do I? Actually, this is an interesting dovetail. Actually, this probably ties in well with this, so maybe we'll leave that open. Definitely want to talk about him. But I think actually I have a better chart set up for you. And I know somebody, and it might be you, Costco, somebody keeps asking me to talk about the damn bond yields. So I do find it interesting that you guys are all interested in this now. Man, there were a long time I would talk about bonds, and people would be like, bonds? You suck, man. What are you, an old man? Bonds. Who would buy a goddamn bond? Okay, so all right. Focus. Okay, so we got, what was that first one we did? Short rates, long term. Oh man, there's so many conversations we could have here about this. Why don't we'll call today's show the interest rate show. Because I don't think we're going to be talking, this is going to take me a while to get through. I mean, do you want me to do, let's do a poll. Do you want me to do full meal deal, long answer or short answer? Do we want to go full meal deal, or do we want to just like, oh, you bastards. Look at you. Everybody goes long answer. Hey, there you go. Now there's a sales pitch. Quinn Shield says, yep, I started watching BCS, then 30-day trial, and now full knee-deep in level 1. Loving it. I mean, man, what a sales pitch. That's perfect. Ooh, Katrine. Do we have a lady in the house? Are you in there hanging out with the other ladies in Colleen's lounge? Man, those guys, they're I tell you, you probably should. Yes, I know you're a lady too. You are the ladies' lady. Yes, that's me. Level 1 and Colleen is my friend. Oh, awesome. Excellent. Good. Excellent. Perfect. They always say, the ladies actually make better investors than men, boys. So they're probably going to show us up. But anyway, that's here and there. And by the way, you guys, you're free to open up your own room. Like, you can create private rooms. You want to, have, a private room with a few of you and a couple of the guys that you like in the school program. That's totally fine by me. Okay, where was I? So, full meal deal. You jerks. Macro. Short. Yeah, see, we probably should talk about the TED spread. Oh, God. Where do we go? So many conversations to have here. I'm probably going to want to have that open. But anyway, let's see what we got here. Boom. All right, so there's the car report. Let's see what we got here. CBOE TMX 1 month. And nothing shows up on the screen. That's not a good sign. Wonder what they did. Wonder which one this is. Oh yes, Google's telling me that they even want me to talk about interest rates. Okay, well, we can't do that. 10-year U.S. rate. That's too bad. Whatever study that was, I bet you it was really cool. Jerks. I noticed TradingView's having a bit of troubles. Like they changed the. I noticed that there were a couple. Altcoins. I got a fill on an altcoin. I got a fill on a stable coin doubling. Like, what the fuck? That's not supposed to happen. Anyway, TradingView completely missed the chart. If you looked at TradingView and you thought you had sold at a certain level and you believed TradingView, it would be like, sorry, pal. Okay, this isn't a bad chart to work with. Holy Jesus, look at the M's. M's everywhere. Okay, what do we got here? Isn't that interesting? So last time I updated this, yields were falling off a cliff. And we got the inflation-deflation study, so that'll be pretty handy to look at. And we got the TED spread here. Kind of cool. Okay. So we could probably do a pretty good conversation about this. Although, this is the chart we probably really wanted because this is a long-term interest rate view. And this is what you really need to see to understand interest rates fully. It really sucks. This and this are the same chart. So maybe I wonder if we have any other long-term. And you notice that TradingView's got to get off its butt too. If anybody's on the inside of TradingView watching this here, TradingView's got to update its M2 money supply symbol. The Fed went and killed the one that they follow, and they're actually tracking another data set now. But anyway, I'm probably just talking to myself. Oh, it's too bad. See, that was probably the chart that we wanted to see. Yeah, the bastards. Okay. So you wanted the long answer. Half of the long answer is me just talking to myself for 10, 15 minutes trying to find this stuff. Yeah, I don't see it. Damn it. Well, that sucks. Oh well. Okay, so let's try and ad-lib that long-term picture. Okay, I can't believe they took that away. How bizarre. So it should be like all 10-year U.S. Treasury note. Well, let's see what we got here. Oh, look at that. They only go back to 64, the bastards. I think the U.S. Treasury goes back longer. TYX? Is this longer or shorter? Oh, they only go back to the 80s, bastards. Well, I guess we'll have to work with this. So the point of the matter here is hopefully you see that this is a big cycle. And gee whiz, the bottom in long-term interest rates back in the 1940s, 1950s was back down around this, 1-2%. You can probably find that image on, like if we went long-term interest rates, U.S. Let's go like 200 years. See what we get. Images. So, where's a good image? Oh, this isn't bad. Yeah, this one's good. There we go. So you can see back in the 40s, the end of the Second World War, they were kind of down in this area before. So, I mean, what you really got to see out of this image, and it's hard to see, but you have to see that this is one circle. And then you could argue like this is a circle, and this is a circle, and this is a circle. And you can see that they seem to move in about the same duration. We happen to go through a quite dramatic move in interest rates. Why? Why did this happen? And this is the sad commentary of our lives, people. If you can understand why that happened, and more importantly, what happened here, then you'll actually understand the story of human history. There's a paradox. Wow. What did he just say? I would make the argument, of course, like I say, you never hear about people in fucking the real world talking about this stuff, and it drives me nuts. Am I the only person who sees this? I swear, it drives me crazy. I must be, and I don't understand why more people don't see this. I just don't get it. I must be fucking from Pluto or something. But the point here is, why did this happen? Is there anything that got going through here and that really actually gained some serious traction through here? And then all of a sudden, it was abruptly, literally, they put the kibosh on it. And this is actually the end result of putting the kibosh on that. If you can, like I said, anybody. Does anybody on YouTube have any idea what the fuck I'm talking about here? How about you people here in the lounge? Any of you? If you can understand this principle, then the whole damn thing makes perfect sense. Was there any sort of world power that hit maybe a peak right through that event? Did anything happen, even in U.S. politics, that was revolutionary? It was game-changing. That might have happened right through here. That might have actually justified this move in interest rates. I'll give you a hint. 3 letters. L, B, J. It's incredible how people have completely forgotten about this. Good, Adam. It's basically in the same direction, but I think you already know the story. No. The hint is LBJ. That's Lyndon Baines Johnson. So the answer is not Richard Nixon. In the United States of America, as a response to this whole idea of international socialism gaining traction, actually balked and acquiesced and actually gave their citizens some actual life. And LBJ called it the war on poverty. And of course, that led to silly things like minimum wages, and then those minimum wages rising, and actual people getting benefits from the system, and things like public spending getting going. Why did he have to do that? Well, he had to do that because, international socialism, or in essence, the general populace living a half-decent life and a half-decent living standard, that was expensive and it was rising. So, ironically enough, I hate to say it, but I believe that the 1% wanted to try and put the kibosh on that. And the way that you do that most effectively in the marketplace is you make the cost of money itself extremely expensive. So expensive that marginal players will actually be forced into bankruptcy. Or, conveniently in this world, for the 1%, that's sort of degeneration into social disorder, and then whatever puppet government they want to have in place, they inject them as the local authority, the new authority. The 1% tried to do it. First off, the Americans had the audacity to have the American Revolutionary War. Ironically enough, I think that actually caught the 1% off guard. I don't think they really expected that. And then, shortly thereafter, they really tried to put the kibosh on it. In fact, I don't know whether you're aware, but I actually have a direct connection to the United States national anthem. Because in the War of 1812, and by the way, the British burned Washington to the ground in that war. There was one of the lines of your national anthem, right? The rockets red glare with bombs bursting in air. That was somebody writing about Baltimore getting shelled by the British commander. And unfortunately, the British commander's last name was, that's right, Beamish. So it's kind of an ironic twist of fate, eh? Anyway, it doesn't really matter. Point here is that this whole idea of workers getting paid more and rising wages and stuff like that, I mean, I can tell you, I lived through this. In 1980, Soviet Union was all the rage, right? Back in the USSR, that was a song that the Beatles wrote so that they could go into the Soviet Union and do music tours and shit like that. I mean, gee whiz, that sound kind of familiar to a country that is in the world right now. That's another conversation. Anyway, point of the matter here is with regard to interest rates. You can clearly see interest rates, even over the past few hundred years, went to absolutely ridiculous levels. And unfortunately, a lot of people in the marketplace kind of assumed that that was the new normal, especially in this socialist world, workers' rights. You could make the argument that the Fed is actually saying the same message it's saying right now. Ironically enough, what do you think about international socialism? Do workers have much rights these days? How's that going? It's kind of funny how the right wing here has tried to encourage them to raise the minimum wage, and that didn't go over very well. So I would make the argument that if the politicians had gone in and done one of these sort of war on poverty kind of things, which they're trying to do, then they might just start this cycle all over again. But I can tell you, Soviet Union collapses, baby boomers, of course, leave the workforce, and now, and this is the dangerous thing about interest rates, now we actually have technology that is building, basically humans are becoming irrelevant, which is a little scary because there's a hell of a lot of these humans on this planet. And while maybe especially us enjoying the fruits of the modern Western civilization, I've got national health care here in Canada. But there are parts of the world that aren't like that are heavily overly populated. And of course, gee whiz, I think in this overpopulation world, we're going to have to get more used to this sort of like runaway mass viruses that kill a lot of humans. Because the world is overpopulated, which really sucks. I mean, I'm not going to sugarcoat it. There's too many of us humans on this poor little planet. And, the worst part about it is Bill Gates and stuff comes out and says, well, we have to have population control and stuff. And then all the fucking hell breaks loose and, people go off on that. So I guess what I'm trying to say here is that through this period, there was actually like a glimmer of hope for the working class where they could get this wage that they could live on. Joe Biden right now is kind of like, let's go back to those days where the working Joe can actually afford to live. I don't think it's going to fly. And the whole world situation is very, very different than where we were through this cycle. Right? The baby boomers were just coming online. And everything was still a very analog world, which meant that if you wanted to build stuff, it took a lot of workers. In this world, it's a little dangerous. Number one, there's tons and tons and tons more workers out there that will work at like pennies on the dollar relative to what we do here in the West. And And we've got this technology bugaboo, right? Humans may need not apply. So I don't know whether we're going to get that crazy ass spike kind of action. This may take this might take a century to actually develop again. So let's first and foremost look at this from a very, very long-term perspective and understand that this was, I think you could make the argument that this was the end of the socialist dream for the human experience. And it's fascinating. Like I said, the central bankers, central planners officially announced here that they were officially going to put the kibosh on this. Paul Volcker comes out and calls it a war on inflation. Well, what is inflation? And you've heard Powell say this recently. He doesn't give a fuck about Bitcoin going to 100 Gs, 200 Gs, 500 Gs, a million, 10 million, 100 million. He doesn't care. He doesn't care if GameStop goes to 1,000, 2,000, 5,000, $1 million. Hedge funds get wiped out on Wall Street. He doesn't give a flying fuck. What he doesn't want to see is this, where workers demand higher wages and it sticks. Because what ends up happening is the worker demands higher wages, and I actually walked through this. I think it was last weekend show. It might have been one of the weekly rants. But the worker demands higher wages, and then fake Canadian? That's a good one. I'm not quite sure where that comes from. Okay, let me finish my sentence here. Fake? Really? I'm fake? I don't think I'm fake. I gotta say, man, if it's anything, I am an open book. And I love that about me. I am so fucking flawed, it's ridiculous. I swear like a sailor. I'll never do well on this YouTube marketing crap because I'm not politically correct and I'm not a sellout. So, if it's one thing I'm absolutely not, it's fake. Anyway. So I find it fascinating that the Fed comes out right here, the central planners, and they say, we are officially declaring war on you. Well, that's not very nice. They destroy the Soviet Union. They absolutely gut the third world. They, set up banana republics wherever they want. They set up the US dollar on a complete hegemony system. And at the very bottom, they've completely destroyed all workers' rights. They go, okay, I think we've kicked the shit out of this inflation. These kids are not going to be asking for any more money soon. And it's interesting, the economy's really weak right now, just stunningly weak. Especially the U.S. economy technically has the world's economic engine. Don't be surprised if you actually hear that China goes and devalues its currency again. I actually saw that the other day. That's the last thing anybody is expecting. Yeah. And yet that would be more sort of this, we have to continually gut our economy and our working force to stay competitive, to keep the prices down so we can keep selling into the U.S. market. Because it's the only fucking market that's growing in the world. Anyway. What are you guys saying here? The Fed is lovely, isn't it? Yeah. Well, one thing I would definitely say that I'm a little disappointed in is why don't we have more conversations about the Fed and these central bankers being completely honest that they're private corporations and that they make a lot of money and that money should go straight back into the government's coffers to pay for all the debt that we're incurring here. I mean, that's what should happen. I did find it interesting that the Fed said last year, they were like, oh, and we have graciously decided that the Fed will return all of the money that we have made to the U.S. government for the year 2020. Oh, isn't that nice of them? Gee whiz. Shucks. So, there's your backdrop. So understand that these rates were absolutely insanely historically over the top. We should actually get used to a world where probably, like 4, 5, 6% is actually probably a pretty damn stiff ceiling. And this might take like literally 30, 40 years to play out. I have made comments recently that I expect interest rates to rise for the next 30 years. That wouldn't surprise me. Probably more importantly, what's actually going on here right now, and you guys probably don't understand this, is what's happening with longer term interest rates, and maybe that was a facetious statement of mine. If it was, I apologize. But what's happening with longer term interest rates is actually what needs to happen for this whole damn thing to keep going. So that sort of brings us to this kind of image. Keep in mind the whole modern monetary theory kind of people. They like the idea of interest rates aren't an issue in the marketplace, but I do think they are. The cost of money is not an issue, but I think it is. The question I have is, what is the market's perception of this concept called inflation? And that's where I really like these kind of studies, where we're going to measure the tips. They have an inflation protection payment. So if there is inflation and it's reported, then there will be an extra payment on top of this investment vehicle. And on this vehicle, there is no inflation premium. So if there is no inflation, then nobody's going to want to buy the tips, and they're just going to want to buy the TLTs, or basically this direction is which way the spread goes. If, however, people are like, ooh, boy, we got a bit of a problem here. There's some inflation coming into the system, then they will bid up the tips. They will pay up for that premium that they know is coming. And interestingly enough, we seem to have a situation. I think the market sees this. But what's fascinating about this image here, all of you, especially on YouTube, especially the people who asked me to look at this stuff, and the person who's in the class who asked this question, would we be a buyer here? Is this a W? Did a W just confirm there? Costco, was this you who asked this question? I think this was you, wasn't it? So we know as professionals, there's no way in hell you're going to come in on the buy side here. Where should you have been buyer? Or where should you have been thinking, okay, we're going to start getting ready for this trade? Clearly down here. The old W's. So you can see that signal actually came in. When is that? Wow, that was actually last fall. October. Here we are 6 months later, and lo and behold, what's going on? The public is talking about this trade now. So, are you coming kind of late to this conversation? And yeah, and what a surprise. They're talking about it in the media. You have to understand, even that CNBC channel, they are the public. And the worst part about it is I know for certain that news channel and all of those puppets that you see on that channel, they are all insanely scripted, and they are told to say a very specific message. No doubt about it, without a shadow of a doubt. I wouldn't even be surprised if there are actually payments in an interesting sort of way for people's sort of cooperation in the whole fuckhazy. So, that's what I find hilarious, is people turn in CNBC and they think they're actually listening to people placing bets that day in size. And it's a con job. It really is. Yeah. So anyway, the point of the matter here is it doesn't surprise me that the public is clamoring about inflation now, but they are so fucking late to the trade. It's ridiculous. But as I had said earlier, we definitely, the interesting thing is W's are W's are W's. And this is why, remember I had said earlier, this is why you use technical analysis. Because if you're going to do the trade, you buy here and you risk to here, right? Buy the W. But coming in and doing the trade here, fuck, this thing could be all over the map here. And you got to, if you bought there, you got to be happy saying, oh, gee whiz, look at me, I'm awesome. So, is that a trade I'd probably do? No. Does it make sense, looking at this image, that the public is talking about this now? Yes. And is the public going to go and buy this here because they're all freaked out about inflation? Yes. And is the public probably going to lose money? Yes. That's the way the game goes, right? 95% of all the public loses money at this game. So understand that the inflation message is actually getting a little bit old. It's 6 months old now. If I was a trader off of this, clearly you can see the 50% rules were up against this level here. If I had bought this, I'd be taking profits. And if I want to sell in size, what do I have to do? And this is probably the worst part about this. If I'm an institutional player and I've got billions of dollars on the books here, that this trade has made me a lot of money, but I gotta fucking get out to the tune of billions of dollars. What do I do? Anyone? You gotta fucking shill the long trade to the public so they buy your bags. It's that simple. So the rampant message you're hearing about inflation now is an old story, and you are probably going to be buying thinking, hey, I'm protecting myself from inflation. And the sad thing is you're going to be buying this fucker's sell order. That's the way the game goes. It's brutal. Now, there are a couple interesting developments here. What do we call the relationship between things like short-term interest rates, medium-term interest rates, and longer-term interest rates? Is there a sort of a name for that? Yeah. So a lot of people actually study this relationship. This is the relationship in prices. These are the relationship in yields. And what's the one thing I think you can take away from this message fairly easily? Look at it. The short end of the curve, are those rates going up big time? Long end of the curve, are those rates going up big time? Looks to me like they are. So what's the one clear message that you can take away from this? Very good. Steepening of the yield curve. So, is that the sign of an unhealthy economy or the sign of a healthy economy? That's an interesting question. I don't know that a lot of people even know the answer to that. Maybe think about it in real terms. If longer-term interest rates are higher and banks lend to the public at those higher interest rates, but banks refinance that debt on the short term at low interest rates, is that a good deal for them or is that a shitty deal for them? That's probably what you have to ask yourself. I'm glad my level 1 TA and DB guru and TRISOF trading god Kevin knows the answer. As I would expect he would. How about all of you over there on YouTube? If I am a financial institution, and listen to the words I'm saying. If you just listen and think this through, it's common sense. if I lend out to the public on the long end at a big, fat, high interest rate. And to offset that lending, I'm going to go borrow from the central bankers at a very low short-term interest rate. Is that a good thing for my profit margins and my balance sheet, or is that a bad thing? And if that spread is widening, is that getting better or is it getting worse? Hey, there he goes. People are. All right, so Mike says, great deal. Kevin, of course, knows the answer. It's a fantastic deal. It's easy money. This is guaranteed profits for the financial services industry. Guaranteed profits. How do you get an economy going? How do you get it jump-started? How do you get it so that the economy has no choice but to grow? You make it so that the economic engine of the market, the financial services sector, has no choice but to make bucket loads of money. Does that make sense? It should. So in an interesting sort of way, that's actually a very positive sign for the economy. It's a very bad sign for bond investors. I don't know why the hell you'd be a bond investor way up top, but there was one guy on the internet. I really tried to help him too. In that he gets his commitments to traders data from somebody, and I don't think they're actually reading it correctly. But I would make the argument that if you understood the way the commitments to traders reports work, the commercials, which are the teal line, they always want to be opposite the trend. Their job is not to make money from trading. Their job is to remove price risk for their clients. So they simply identify who's going to be at risk. They're called the smart money. They usually know what's going to happen next. And they always take the opposite side of the trade. So then that way, their hedge accounts, they actually get charged different margin rates because they're not in it to speculate whether the price goes up or down. And they know that there is an offsetting trade on the other side of the ledger. They're called hedge accounts. So that's incredibly valuable information for us speculators. They know exactly what's going to happen. And all you got to do is just figure out what the hell they're thinking, and this game's really easy. Of which this is a concept taught in our level 2 program. And it was so cool. Karan did a daily brief presentation this week, and he's our level 2 instructor. And he's kind of like, I use all this shit in my day trading. And oh yeah, we learned this here. And I use this tool on my screen. Oh yeah, we learned this here. And of course, commitments to traders, an important part. I mean, you got to respect what the hell these guys are trying to say. And what kills me is this guy calls himself the Bond King. And he's got the interpretation of the fucking report all wrong. This, if you understand it, is what we call a reset. It's a check where everybody's going to go, okay, I don't know what the hell's going to happen next, but whatever happens, we will identify the trend. And when we start trending, and keep in mind the green line are large institutions, they facilitate the trade for the hedgers, and as a result, they have no choice but to make money and be on the right side of the trend. Jerks. But you'll notice that this thing put in a massive W, and of course this thing put in a massive M right on that insane blow-off top right through that crisis event last March, right? Well, actually right up in here. So actually, no, they didn't come in. Maybe they still believe, there might be more crisis here. But as we sort of stabilized there through sort of April, and then of course the bazookas came out and all that kind of fun stuff, the commercial industry put in a very, very bullish for them, which means bearish for the price signal here. And then not only that, they also checked this signal here and confirmed it with a breakout And gee whiz, what are we supposed to think if you ever see the market smiling at you? So very, very powerful signal here. And this signal has not changed yet. Obviously with the COVID relief package passed, that's going to be some sort of catalyst that's going to get the market's attention. We're probably going to have to figure out what value is now. But more importantly, I think these guys were actually really worried about this whole minimum wage and this actual price inflation concern coming back. I think they really were. And I think the Fed didn't really want to get involved, and they just sort of said to the politicians, in a very subtle way, what I heard from Powell was, look, we got to deal with the vaccine. Economy doesn't really need any more stimulus. Economy will do fine if just vaccine. And I think that put the kibosh on the whole minimum wage increase, which is what I think the inflation people were really worried about. So we'll see how that plays out. Point of the matter here, though, now we're actually at a situation where we're at a relative extreme, but it's still trending. You don't know whether this thing's actually going to W out and start trending higher, and this is going to M out and start breaking down, and you can't put the cart before the horse. You have to wait for this thing to actually break down. And until that happens, I can't be bond bullish. I have to just leave it alone. And I mean, I don't know where the hell the bottom is here. My hunch is there's probably some, we always say look left. So that area there, there's these lows in here. And probably also too, you can see this is an old contract high. That's what our low was. Notice that, all the Wyckoff check kind of conversation. Boom. See that? What a coincidence. Actually, even better. Right there. Doink. There's probably some buy orders sitting there on the books. I wouldn't even be surprised if this actually kind of goes like, we've had the legislation passed. Maybe it kind of, we do like a head and shoulders kind of thing. See, against that high there. Then we find out whether this is some big honking fractal. And indeed, maybe we get another push of COVID here. We can't quite do the vaccines. The minimum wage push gets going again, and the bonds are going to start, getting concerned again. And if that's the case, maybe we do see a pretty precipitous move up. What would that imply for our rates? Well, interestingly enough, and this has been my sort of thinking here recently, if we think about that head and shoulders kind of thesis, you can see it again here, right? This low. More importantly, hopefully you can see that sure as hell looks like a hell of a neckline. So, and also too, look left. That's probably that little battle point that we pointed out on the bond charts, but ultimately I think this is our line in the sand. And I mean, look at that number. That's 3%. We could sit in this range of, sky's falling. My hunch is that low and that low now become key support. And probably what's going on right now in the market is the market's just simply asking, do I want to be back in this trading range? Notice key low, pivoted off it, lost it. How many times have you seen this in altcoins? We see this all the time in these goddamn altcoins. Right? They put in a bottom, then, the Polo, it used to be Polo, probably now it's Binance and shit. They got one more fuck you move, wash out the stops, and then it goes. How many times have you seen that? Please, people validate. You've seen that 100 times. I know you have, Kevin. I know you have. I mean, this is like a crypto fuck you. It's right there. It's staring you in the face. Too many to count. So the irony of it all is it doesn't matter whether it's a cryptocurrency or whether it's the Dow Jones Industrial Average or whether it's a goddamn interest rate in the market. It's all the same. I've told you guys this before. I could get rid of this, and just trade the charts, and it wouldn't matter what it is. If I see a W on a volume breakout on a bullish momentum divergence, I'm fucking there. Whatever it is. Could be broiler chickens for that matter. What are we trading lately? There was something funny we were trading on the site recently. So, it looks to me, and then of course you got that high there. I mean, in fact, level tours, and Corral was going on a presentation. He loves this. This is our horizontal support and resistance study we do off of like futures charts to try and see where the battle levels were in years gone by. And you can clearly see, look at my funny little line here, and then if I take them all away, look at all the cluster of horizontal support and resistance in there. So you can see there's going to be a hell of a war at this level. And also too, if we kind of think if this is some sort of fractal, then really what are we talking about here? So that goes like there to there to there, you know, just kind of symmetrical. To there to maybe there, right? Well, what does that put us? 2032. Do we really have to worry about double-digit interest rates for the next 10 years? No. It's really that simple, folks. What I'm a little worried about is just sort of like in the short term, that the traders, they've got the fucking public by the short and curlies. And, you know, I mean, you've heard me talk about these kind of charts before. If I was a trader and I had the balls to step in off the bottom end of the range, and I've shown you this on a gazillion altcoins too, it's no difference. I mean, the irony of it all is this is exactly what we teach at the site. And our TRISF group, we're doing this literally every single day on junior stocks. And also, too, you could argue on cryptocurrencies. But in essence, you can see this is the reload zone off of the bottom. That's that panic. Oh my God, sky's falling. Well, not really. The commercials all came in and locked in just fucking killer rates. I mean, the commercials have locked in 10-year interest rates at like 0.5%. They're laughing. I mean, that's embarrassing. Look at fucking Commodities. He's sitting down there at 0.5%. And here we are at 3x that price now. 3x. That's a triple on his money. Now, look where we're coming into on the price charts. What's that Beamish guy say about something about 61.8 to 78.6? So, I don't know. Does Beamish give that a name? I like to call it, just like this was the reload long zone. Of course, Kavart got his crazy ass fill down there, you bastard. No, well, no, I wouldn't call it a PRZ. This is what I affectionately call a reload zone. So this was the reload long zone, and this is the reload short zone. So now let's go back full circle. You hear all those crazy fucking media people and all the fucking talking heads on, CNBC and stuff clamoring about inflation. And you better go buy your bonds and bury your head in the sand. But is that really a good place for us to be buyers? Have I ever shown you charts before and say, for God's sakes, do not buy in red boxes? That's terrible. And then secondly, are we maybe being encouraged to buy somebody else's institutional players, the smart money? We're actually being encouraged to buy their sell orders. And that's really what I think is going on here. So what do you think, Mr. Question? Only took me about an hour and a half. Fuck, look what time it is. I got to get out of here. What a doofus. I told you that was going to be a long answer. That was not going to be an easy answer to give you. So, really simply put, I think you could make the argument that Costco, you feel like your question was answered. Like, I get the impression that the public's being played here. I think that, yes, short-term price pressures are a problem. And I think that the bonds readjusted themselves. And, I mean, hell, fuck, if you were if you played the yield curve to the long side, I mean, I suppose you could play this. I mean, that was a fucking hell of a trade. So they made great money. And then, of course, you know, if you're short bonds, poor old Mr. Bond King. Ay, 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 ay. You know, I like to affectionately post every day on the site, okay, are we in a risk on or risk off kind of mood? And people buy bonds when it's risk off, right? When the economy's weak. And look at this chart. It's just been one directional the whole fucking year. How do you go on YouTube for, I mean, what is it? It's the end of February. 2 straight months. Bond, I'm a bull, I'm a bull, I'm a bull, I'm a, oh, Jesus Christ. After what time do you go, oh, you know what? I've had enough. Fuck this. You got to be a real masochist to be able to handle that. That's, yeah, you got to give the guy credit for at least sticking to his guns through that whole market. That's tough. At least I'm the type of guy where I'll say, look, I'm a bull until this level's broken. If this level's broken, I don't know jack shit. I'm stupid. Don't subscribe to my newsletter. I don't know what the fuck I'm doing. I'm going back into cash. Whew, that's tough. That is tough. I got to tell you, man, that is tough to look at every day. And, you know, on the same note, I mean, everybody, let's see if people on YouTube can get this message. Is it a good idea for us to be really super bullish of risk right now after, you know, seeing an image that looks like that? I mean, wouldn't it maybe be healthy just to have a little bit of back and forth here just to maybe clean this up a bit? That sure looks awfully one-directional in my eyes. And also, too, I mean, I hate to say it, guys. I think that Ethereum event... Oh, jeez. It sucks, guys, but I really think that the crypto universe got played hard there. So, you know, I look at the Bitcoin ETF. Yeah, nice to see this one's rocking and rolling. I mean, fuck, if you DeFiers come back in hard here, maybe all bets are off. I don't know. But especially with that Ethereum ETF, futures contract listing, I look at the chart and it just looks so suspicious to me. But where the hell is it? There's so many charts. Yeah, this one here. This is the futures launch right there. And they just took it up one more and then bang, broke them. I would say if I was a futures trader that this trade's still working. It really hasn't. I mean, maybe you get chicken shit and bail just at scratch because of that. But I don't know. I think I would be comfortable just being short this from that, like, what is that? 1, 2, 3, 4, 5 highs against there and just risking against that brick wall. I find it very hard to believe they're going to be able to punch through that. But, you know, what the hell? Go for it! Again, that's just sort of my opinion. It doesn't really mean much. If anything, I think it's really important for us to respect these kind of messages. We knew that this was the end of the move, not the beginning. And then, of course, you know, you look at price itself. Price is, you know, I mean, maybe you're going to learn this over time. Who knows? But, you know, actually right here. Price doesn't naturally want to move this way too long. You know, is this too far, too fast? I think so. I do find it interesting. Kevin actually had this Feigenbaum level as his target for our raffle. And it looks to me like Kevin's going to win the raffle. I don't think anybody came anywhere close to your guess there, dude. That's pretty slick. Also, too, what kind of concerns me now is, do I have this on here? Yeah. On the weekly basis, if we go back, way back when, I remember we had one site member who did very, very well on Bitcoin. There is my MacD. Where are you, MacD? You crazy MacD. And he was a super proponent of Bitcoin through here, made just bucket loads of money. Then we came down, and he kind of went quiet because, just counting all his money. Then we came down, and he actually publicly posted right in here. He said, it doesn't get easier than this. This is basically a bullish momentum divergence on a weekly price chart. That's pretty damn powerful. Let's put all this other stuff away. Boom. 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 And of course Willie was stupid too, so throw that in there, but we don't need to talk about that today. But just, this is such a simple message. So there's your lower lows in price. And here's your higher lows in MACD. So, at this point here, it was kind of like, well, the market is actually trying to tell us that it's a lot stronger than what it's leading you to believe through this. And sure enough, look back hindsight, well, I guess that was right. We also actually had it too with Kevin's killer ass fucking buy right there last year. You can also see the bullish divergence right there. Leading you to believe that the market's a hell of a lot stronger than what it looks like. So that's, a good information for you to use. Actually, I'm actually pleased. I thought this was a weekly bearish divergence on here, so it isn't. So that's actually a good sign. I don't know whether we're at the top. Maybe it looks like this and we roll over and grind. But I would have been very disturbed had I loaded this up and we saw that. If we saw that, then it would have been like, oh, shit. But that's not the case. So that's good. That's actually encouraging. So if anything, I kind of like the idea because this is a V-top. Pullbacks, still buying opportunities. You can even see through just this consolidation. You can see through here, see down, up, down, breakdown. All right, if you change that to a line chart. Boom, right? You can see the M. You can see the M sort of through here too. So we don't really have an M yet. That's encouraging. Did we say that the central bankers now all of a sudden have a whole bunch of ammunition and we might actually see some bazookas go off? Anyone? Yeah. The Fed is bazooka-able. Is that a word? Bazooka-able? They got lots of ammunition. So, do you guys understand that? Well, they've taken the fluff out of price here. This isn't rip-roaring, insane fucking, well, just buy anywhere. It doesn't really matter. You're going to make money. They ripped these kids a new fucking asshole here. Bang! Right? Let's call a spade, right? You come in here and just buy willy-nilly. This is often what happens when you buy markets that just absolutely face rip. So, all the kids that bought in here and didn't really know what they're doing, they probably all got their hopes and dreams crushed through this. And if anything right now, those that are still left in the game, they're kind of sitting there going, okay, come on, please, baby. Please. And actually, we make a joke on this site. It's terrible. But you could really make the argument here. Let's assume that Joe Sixpack went online and some clown's like, yeah, fucking buy anywhere. It doesn't really matter. You'll make tons of money, blah, blah, blah. And he goes and loads up on this move up here. And right now, he's just fucking feeling like he's just the shit. Where is this guy sleeping right now at home? Let's say he bought there. Where is he sleeping right now? Does anybody know? Well, I know. Jesus, I hope there isn't one inside your house. That would be brutal. How about you people on YouTube? And there might even be a few of you right now. When you tell your wife that you spent the family's summer vacation money buying cryptocurrencies through here, what is the look on her face when you tell her, oh dear, well, maybe we won't go on summer vacation this year? And besides, what the hell? COVID, you didn't really want to be on vacation anyway, right? So I can absolutely guarantee you, especially like on this move right here, there's a bunch of guys that bought this move right here and they are dying 1,000 deaths right now. Like these guys right here. They are so, like, they were like, buy the fucking dip, woohoo, yeah, we're all gonna get rich, we're gonna go, oh no, 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 no. You know, same guys right here. You know, there's a bunch of guys that are trapped right here. We call these trap bulls. So any kind of counter trend rally in this market doesn't make sense. Oh, gee whiz, look how those levels, that guy right there, that guy right there, these guys all in here just so happen to be right in the area where there's a bunch of people that are sleeping on the couch, and for fuck's sakes, just get that price up there. I'll get out of this trade. I'll never buy another one of these damn cryptos again. Does that sound plausible? So that's kind of the environment that I see right now. And I do find it kind of interesting how they've dumped this market. Remember, Fed doesn't have any bazookas. No bazookas, fuck you. I don't care. You politicians, you don't do anything, we're not going to do anything. All of a sudden, legislation is passed. Of course, it's the weekend. Yeah, let's fuck around with the kids a little more. Oh, and gee whiz, look what's happening on our momentum indicator. This appears to be making a higher low than that low. That's interesting. Well, even though we made a lower low in price. What did I just tell you about price if you see that? Is price as weak as what they're trying to lead you to believe? Maybe. The problem here, of course, is that, and this, of course, is where a lot of amateurs fail, is this actually a confirmed divergence yet? And actually, I think you level oneers, you're on candlesticks right now. I think you guys do MACD next week. So you'll learn the difference between confirmed and unconfirmed and how we sort of, you know, how it's so important that the damn divergences are confirmed. But I would say here that we have the smatterings of a market that's trying to tell you that it's actually not nearly as weak as you think it is. So, interesting. I don't know whether I really like this level yet. I mean, like I said, we haven't confirmed this yet, so, you know, can't put the cart before the horse. I think probably off of lower time frames, you can see, gee whiz, we got another one of those things where the market was making lower lows in price, and yet, wow, the momentum indicator is actually making higher lows in price. And this divergence is actually confirmed. So again, it looks to me like the market's trying to try and tell us that, hey, you know, I'm not nearly as weak as you think I am. And what do you think is going to happen in the market if that stimulus package is passed in the Senate and anybody says boo to the Federal Reserve? Powell publicly said last week, I will do anything to step in and support prices. And he also said, I don't see any bubbles. So as a result, I'm not worried about stepping in front of this train. And he's probably even more happy now because it looks like this minimum wage push that would have brought that inflation concern that he's worried about, that's basically been abandoned by the left wing. So it's fascinating. Anyway, put it all together, I don't know whether it's really a good idea to get too bearish here, especially in the face of things like bullish momentum divergence. If I was a bear and I saw this and I was trading off the 1 hour, I just have a simple rule. We can't get bullish until this bearish divergence has resolved itself. You can see it's a little bit of a bullish divergence right in here, boobity boo, and the market rallied smartly away from there. It turns out that the market did go and M out, and you can see how the M started to come back in. We had a really powerful failure in here. So that is that divergence playing itself out, and now we're back pointing bearish, and down goes price. But like I said, we got a bullish divergence here now off of this 1 hour chart. You can't short that. And what's concerning, like we said, is off the 4, if you're a bear. If you're off of that 4 hour chart, right, if they really jack this thing and get her going here, this might just fire that 4-hour divergence. And divergences within divergences are often very powerful signals. Not enough for me to justify taking a long shot yet. And that's just the way that I trade. I like to see location, then I like to see divergence or, indicators starting to, point up, and then I want to see some sort of price structure. So don't quite have price structure here yet. But, if anything, at the very least, we should tell the bears, you better cool your jets. All right. It is now 1 o'clock. I think there was one other question here. Costco feels as though I gave him some good answers to his questions, so we'll see what we got here. Can we predict that the value of cryptocurrencies will move in parallel with commodities? Ew, no. In the upcoming greed cycle. Why wasn't the value of gold? Well, okay, so first question there. It really all depends on what the hell your cryptocurrency's mantra in life is. If your cryptocurrency comes out and says, I am a store of value, end of story, that is where I finish, then yeah, probably. It's probably going to just track along other sort of store of value stories because the world, in my opinion, is getting ready to grow, and people are sick and tired of owning hard assets, and they want to see some growth. The interesting thing with cryptocurrencies is I don't even think they even know what they are yet. And they're kind of schizophrenic. I think when it was just sort of the Bitcoin story 10 years ago, I think the store of value worked pretty well. Miners paid for cost of production to keep the network going and validated, and they did a fantastic job doing that. Never really got to the point when any one miner or one mining body really took over the network, and that's the death sentence for these things. So over the past 10 years, and I think now this thing is distributed around the world enough, and there are enough competing members, not only on sort of like a tech basis, but also even a national basis, to try and keep the network from being corrupted. But if you can address things like the global payment system, if you can address the need for industry to move away from sort of the manual bookkeeping ledger system to a more automated, self-validating ledger system, that will produce massive economies of scale, which in essence is growth. It's just inverted growth, if that makes any sense. I mean, I suppose you could argue a plant has two sort of bodies. It has the body that's above ground, that we see, and that flowers and produces fruit. But there's also, and it's actually quite a bit bigger, there's a part of the plant that grows underground. And this might be kind of a similar analogy to that. This is going to be like building economies of scale and efficiency by cannibalizing the current system. But I already talked about the 2 10-year spread there. I said everything I needed to say. So back to our point here. So I don't think there's going to be a hell of a lot of top line growth in our world going forward. My message of late was Japanification, and I don't see any change to that. Why would that change? The banks hold all the paper. They don't want to see any of this paper go bankrupt, so they're just going to keep as you guys on Cryptoverse like to call it. They're just going to keep doing the same old, just keep the system moving. Japanification. And I think what ends up happening is we get short-term shocks to the system, things like COVID. And if you actually know what you're doing in this game, that COVID sell-off was an incredible buying window. And what I noticed like last March was if you turned on the media, and this is kind of like the same conversation about question 1, when you turned on the TV and the media, everything was sell, sell, sell. Goldman Sachs was coming out and saying, we don't think the economy will ever grow again. You probably should sell all your stock. And Klaus is coming out going, yes, sell all your equity. Run into my arms. I'll take care of you. Right? Terrible. Absolutely terrible. Because actually that was the buying opportunity of yeah, remember I've told you, if Ethereum ever gets back down into that low, fucking buy the shit out of that. And the 1%, they might drive Ethereum prices down into those levels, and you have to have the tenacity to step in there and buy, like I show you repeatedly how Kevin did. Damn difficult, not easy. So in a weird sort of way, I don't know whether you can program yourself that when you turn on the TV and all of the talking heads are saying sell, actually that's probably a good time to buy. And then conversely, when you turn on the TV and everybody's saying buy, that's probably a good time to not buy. Sucks. Crazy world. So you say a blanket statement here, cryptocurrencies. I don't know. It really all depends on what the end result of your cryptocurrency is. Mr. Vitalik, he wants to build the supercomputer of the future. Well, that ain't no commodity. I mean, ironically enough, the units on the supercomputer themselves might actually turn into a commodity. But Ethereum itself is not it is a computer. The only problem is how big can it get? The irony of Mr. Vitalik and his supercomputer is that everybody falls in love with his supercomputer, and then it makes his supercomputer unattractive, uncompetitive in the marketplace, and the price of the supercomputer falls in the marketplace. Well, so what were you buying? Were you buying the supercomputer, or were you buying, hey, I want a piece of this supercomputer and looking to make a speculative gain? Well, that's a hugely different conversation. So this is a very, I would say absolutely the simple knee-jerk answer is no. The knee-jerk reaction with something like a Bitcoin now, however, is, do you all understand how many halvenings will it take from current levels to get the cost of production to $50,000 for one Bitcoin? This is the connection you have to make. So now, with the $50,000 top, can you understand that literally they could play in this trading range for the next, 5 years? 10 years? No problem. So, tough question. I would simply say if Bitcoin ends the story at I'm a store of value, then we're talking cost of production is value, and I would consider it investment grade when we can ever get back into sort of, and what I noticed the past 3 halvenings is the price in the marketplace usually bottoms about, 6 months, a year ahead of that event. And then into the event, they pump it up. Then following the event, they do absolute face rip so that they can establish the trading range to do the same game into about a year ahead of the next halvening event. So based on that, we should be able to actually tell you exactly when this thing's going to bottom. Who can tell me when the next halvening event is? Should be about maybe 6 months, a year ahead of that event. It's really simple. Anyone? Bueller? I remember we were going through... I remember when I was just a young whippersnapper. 3 years ago. Oh my god, that was forever. All right. The happening event was like, oh geez, I can't even remember now. I think it was over here, wasn't it? Something like that. Anyway. And the market, basically bottomed 6 months, a year ahead of that event. I think that's right. March 13th, 2024. Somebody says the next happening event is. Yeah, that's a lot. That's the next one, 2024? There. May 11th, 2020 was the last one. May 11th? Was it on my birthday? No way. Was it my birthday it did it? For reals? 18th. What does that say? May 18th, yeah. No way it would give me that clear of a signal. All right, so there we go. So, I remember through here we had guys on the site that were doing cost of production studies at about $2,500, $3,000, and we bottomed about $3,000, $4,000 bucks. And then, we spend a year or so playing around in that range. The happening event happens, and they bid the fucking thing up. So, it'd be interesting. When was the happening event? Before this May, the May 2020. When was the previous one? I guess, would it be equal distance? Was it way over here? Anyone? What was the one before 2020? Anyway, point of the matter here is if history repeats itself, my hunch is, and who knows? I mean, let's give the YouTubers a treat. We head to new highs. Woohoo! Then we talk about whatever the hell this looks like, right? And then, kind of the same sort of thinking. We make some of our screaming bottom. We're figuring 10 G's is the next cost of production floor. So 5,000 is where we are now. So that bottom there. Yeah, so something like that, then like that, then I don't know, away we go like that. So there's your future. Oh, that was pretty easy. 2014. Wow, was it all the way back then, eh? Way over there, right? No, it looks like we're missing one. Probably was one somewhere in here. 14, 17, 21. All right, well, anyway, we're all over the map here. Anyway, so I wouldn't be surprised if it looks something along these lines. Of course, everybody's like, boo, hiss, boo. Hey, I said it was going to go to new highs. Don't get off my back. I don't know. I mean, if you're asking me, just as old gnarly market veteran, this sure looks to me like it's getting near done. Actually, I think I remember, yeah, this high here, that was a new high, spike high, and then it just came straight off. So, yeah, maybe it has to look like that. Anyway, daily charts, we just have a general rule at TRI. If you ever see this bearish divergence in MACD price momentum, I think I showed you another example of this. You just got to cool your jets, man. You just got to leave this thing alone until this cleans up. And that's really my view on this. But to answer your question specifically, I don't think you can paint cryptocurrencies with just one brush and say they will all do this or they will all do that. Too wide of a story. If you have store of value names, yeah, I think so. If you have names that are addressing growth markets, no, won't follow that model at all. All right, and why wasn't the value of gold inversely correlated with DGI considering inflation for the last 10 years? Well, I might make argument that good old Bitcoin ate a big chunk of gold demand in the marketplace. And also, too, a few years ago, there was a huge change in the gold supply and demand equation that nobody ever talks about. And I find it hilarious. You talk to these like gold bugs like Peter Schiff, and they never talk about this. Does anybody know what I'm talking about? Let's see if a single person has any idea. Just the biggest, like literally earth-shattering, fundamental, rock-breaking change. And I see it everywhere. No? Nobody? I will give you a hint. It has something to do with a young man and a lady getting married in a certain part of the world. So, yay, Federico got it. Way to go. Remember, I was a junior stockbroker for many, many, many years here in the Vancouver market. I mean, all we did was fucking shill gold stocks. Which is so funny, listening to all these quote-unquote experts in the gold market. What a joke. And, you know, I used to tell people, I used to talk to companies. I used to talk to them on the phone constantly. And the price of silver was so low, and frankly speaking, I don't see any reason on a relative basis it can't go back to those levels. But the price of silver was so low that they actually had canyons full of unprocessed silver ore back in the 1990s that just sat there. And I was like, well, do you even report the assets on your balance sheet as an asset of the company? And they go, no. I mean, it's just not worth it. It was just sitting there. And of course, all the silver people come out of the woodwork and, oh, silver. And then they go, okay, well, I guess we'll go and process that ore now. And my hunch is we're probably going to go right back into that kind of environment. Probably take like a good 10, 20 years, though. It's not going to happen tomorrow. Market's got a definite appetite for well, they did. Actually, I feel as though the air is really coming out of the gold market, but we'll see. Maybe with the Fugazi, the big, Fed bazookas going off here shortly. Maybe we'll see the gold and the... I would say specifically the gold market, it probably got a little bit overvalued because it's not used as much in our society for like industrial production. It might sort of point to the interest rate market there earlier. If you understand the message that the interest rate market is giving to us, I mean, you guys, let's go back there just a second. Is this a bullish or bearish message from the market? The marketplace itself right now. Is that a bullish message from... Remember, I did the whole damn walkthrough of how the financial services industry gets paid. Oh, it's bullish. Very bullish. What's interesting, actually, is our TED spread is finally coming alive here. So, and actually the Fed's probably pretty happy to see this. You'll know the next financial asset crisis is here when you see this TED spread, now called the Fed spread, because the Fed's taken over the banking system, sadly. But you'll know that the next financial asset crisis is here is when this ratio crosses 1.0. So right now at 0.11, no problems, but look what's coming in here. So what this tells me is that the seeds for the next financial asset crisis are actually being planted as we speak right now. And that makes sense, right? The economy is really ramping up. The housing market's going crazy. All of the top of the economic cycle readings, base materials, commodity demand itself is very hot. So, like I said before, the irony of it all is that Klaus wants you to think that it's the end of the world. And I would make the argument that this economy is actually like supercharged to grow. All we got to do is get beyond this silly sickness. Once everybody gets jabbed, I wouldn't be surprised if you see some just staggering growth numbers. That kind of hyperinflationary kind of growth, right? GDP is going to grow at like 8% a year. People are going to be like, what the fuck is going on? Get ready, folks. I mean, I've told you before, if we look at that long-term picture, it's the same message I always tell you guys. Nothing changes here. The only thing that changes is TradingView's got to get off its ass and correct this data point. That's not right. They've adjusted their M2 money supply. But that's not the chart I want to show you. This one. This is what we're staring at. Do you have any idea what that's going to look like? And all you TRIers, I mean, maybe, who knows? I think of it this way. I think the cryptocurrency market just crossed $1 trillion. Keep in mind that on a daily basis, the Forex market does about $4 trillion in activity. And I do believe that all of that business is going to go to the blockchain. So how big does crypto have to get to be able to handle daily volume of $4 trillion? Some pretty big numbers. Go look at what the daily volume of cryptocurrencies are now and do the math. I don't know how big this is going to get, but it's going to get pretty fucking big. And I wouldn't be surprised if crypto, and keep in mind I'm long a ton of crypto stock, so I wouldn't be surprised if crypto is one of the major themes of this upcoming greed cycle that I talk to you guys about all the time. So you better get ready. You better go load up. Now, does that mean that Bitcoin itself is going to get all that business? I don't know. I think what's happening is, Ethereum's building out their DeFi network, and what I see is the prices of that network have gotten a little too high, and so now competitors are coming in and saying, hey, don't use their network, use our network. It's a hell of a lot cheaper, and it's basically the same thing. So this is sort of the difference between the industry going vertically or growing horizontally. And I think what has to happen each cycle is first Bitcoin and the big boys, they grow vertically, and then the industry fills out horizontally as Bitcoin and Ethereum and maybe Litecoin, but I don't know, maybe that's yesterday's story, as they sort of consolidate those gains. And that's what I think our future is going to look like. Okay, folks, I think I'm going to leave the rant at that. Hope you guys enjoyed the offering. Wish me luck with Liam. I like every week to ask you all for luck. It seems to be working, so knock on wood. PMA for the win. Gotta say, TRI, this community, everything about the direction of the community. The community is the core of TRI. And I like the idea of empowering the community to use Sjord's magic engine to revolutionize the world. You guys are making me exceedingly proud. You're demonstrators of best practices, and I'd like to see you all do very, very well and go out and just spread the good word of, all it takes is a little bit of education. Some stick-to-itness, an acknowledgement that you're not perfect and you need work, obviously, if you're not making money from trading now, and a trust in somebody out there in the world that actually, number one, knows what they're doing, and then number two, is not going to fucking shill you some insane product just to try and, buy Lambos and shit. So I sure hope we get that message across, and you feel as though TRI could potentially be that guiding light. And if anything, what I want is I want the community to sell that story to you, not me. It's the community that's really the value here, everyone. So, okay, have yourselves a great rest of your day. Should be a wild week in the market here coming up. Don't take no wooden nickels. Try to play from a position of strength. Oh, by the way, I even did some crypto buying recently. I bought a couple names. So I am in there on the buy side. I also bought some stock recently too. So I've been spending some money. So Have some fun out there. PMA for the win. All the best. And bye for now.